Tomorrow we have the unemployment rate, and in this video I want to go very in-depth, go over some different stuff on why we need unemployment to go up, because that will solve inflation. I'll be taking a look at numbers to help you guys be prepared for tomorrow. And this is not going to be just a normal video of me just going to tradingview.com and charting. I'll be taking a look at multiple scenarios. I'll be taking a look at fundamental aspect and how the economy is performing and what we need to get better for the economy. So this will be a very in-depth video. Make sure to check out Moomoo, link in the description. You guys can get some free stocks there, so make sure to check that out. If you guys deposit $1, you guys can get $10 in cashback. Subscribe, and as always, SundayStockTalk.com to get access to the email newsletter. Let's get started. Let's go to my notepad. So all of this drama that you guys are seeing with interest rates and unemployment rate and all of that is to solve the inflation problem. So if we go on this chart, the consumer price index, we can see the yearly inflation, and inflation has potentially has peaked, but it still is very, very high, sitting at 7%. And what the goal is to go back to the normal levels at 2%. And we could see, and we can take a look at the chart, that inflation is highest in 40 years, and this is a very big problem, and there are two ways to solve this problem. One way is by raising interest rates. So we could see that the past 10 years interest rates has been the highest, and it has been the highest since 2007-2008 levels. And when interest rates are high, it is harder to borrow, and it is harder to get cash. It is harder to buy a car, to buy a house, because we are all dependent on the loans and the credit economy. Now, more importantly, we cannot have inflation in the US dollar, because even if we do have inflation, the Federal Reserve, Powell, is going to crash the market. He's going to do everything it takes for the US dollar to be the reserve currency. We have the Venezuela situation where all of this cash is essentially just worthless because they printed incredible amounts of cash in Venezuela. And during COVID, we had massive printing. Literally, even if it didn't work at home, you were just getting paid every single month, and they printed a lot of money. The second way to fight inflation is by quantitative tightening. So this is the Fed balance sheet, and the Fed basically artificially just pumps money into the market out of thin air, and they just buy up assets, and they are now doing quantitative tightening, which is actually removing those assets. So whenever the government does quantitative easing, the markets always go up, and whenever it does quantitative tightening, it always goes down. And this is a very nice cycle and very nice example. And a video that I really recommend you guys watch is Ray Dalio, the best hedge fund manager in the world right now. He made a very nice video on how the economic machine works, so make sure to check that out. So we need to stop inflation. That is a very, very big problem. And Powell, the Federal Reserve, the government will do anything to stop inflation, even if that means crashing the markets. Now, the third way, and the whole perspective on raising interest rates is so that the economy gets tighter, and then we get higher unemployment number, because if you're a business, it's harder to survive now. There is less cash. A lot of people are spending less, and another man's profit is another man's spending, and another man's spending is another man's profit, as this video explains, as Ray Dalio explains. So once we have tightening conditions on the economy, it gets really bad. But this is why we need unemployment number to go up, because we had all that money printing, all that excessive cash during COVID, and it is all supply and demand. If more people are unemployed, they're going to spend less, and therefore the prices of those assets are going to be Okay, just like real estate, if less people are buying, the price will drop. And even when the government is increasing interest rates, essentially it is harder to buy a house, and therefore the seller lowers the house price. So I know I'm going a little bit over off topic off of that, but now let's actually take a look at the number that is coming out tomorrow. So tomorrow pre-market, we have the number coming out. So tomorrow pre-market, 1 hour before market opens, this is Eastern time, so 8:30 Eastern time, 1 hour before market opens, and these are the numbers: 3.7% and 3.7% for the forecast, and 3.7%, which is the previous numbers. So the last unemployment rate last month was 3.7%, and the predictions are 3.7%. So anything below 3.7% is bearish, because if we have unemployment just going down, that is not good for the market, because all of what Powell is doing, all of this pressure on the economy, then means nothing. That means that Powell is not doing its job, and then Powell might need to raise interest rates a lot more and a lot more higher. So this is very important. Anything below 3.7% is bearish. Anything above 3.7% is bullish, and I would really say, even something like 9, we really need to see higher unemployment numbers so that we could see that Powell is doing his job, and we need more people to be unemployed so that we can have inflation cooling down. And the main goal is the 2% mark. So this is the inflation rate. 2% is kind of the normal rate for inflation, and that is the goal Powell has. So below 3.7% bearish, above 3.7 is going to be bullish for the market. And if we actually take a look at the numbers already, you don't have to be Albert Einstein to really understand that we might get a higher unemployment rate tomorrow. So we had Google, Meta, Twitter, Robinhood, Stripe, Lyft, Intel, Snap, Amazon cutting a lot of jobs, and a lot more companies: HP, Cisco, Carvana, Roku. And imagine how hard it is going to be for a small business, local small business in the current economy. So there are a lot of reasons for that. So that is the unemployment number that is coming out tomorrow. And again, this is all to stop inflation and to get back to the 2% number. And why does Powell want unemployment to go up? Again, same reason. If more people are unemployed, they're gonna be spending less money. They're going to be taking in that money and spending very, very conservatively because they don't have a job, and overall the demand is going to be a lot less, which makes the prices to kind of cool down, and that is the whole goal. And again, as I said, they will do anything so that inflation cools down. Again, I would really advise watching this video on Ray Dalio. So what does higher unemployment solve? Inflation. And this is why we need higher unemployment rate. I personally think the unemployment rate is going to be, I personally believe that the unemployment number is going to be higher. So if we check out the unemployment number on investing.com, and I want to show you guys on the unemployment number is actually really, really good. Okay, the job market is very, very, very strong, surprisingly. Even all these politicians, the Democratic Party, they're promoting that, we have a lot of jobs, we have created all of these jobs, and yes, that is a fact that the job market is very strong. If we take a look at the 5-year, the job market is the strongest. So I personally believe that unemployment rate is going to spike, and that is what Powell wants, because that is how we solve inflation. So overall, hope you guys enjoyed this video. I went over a lot in this video, but again, very, very simple. We want unemployment to go up tomorrow, and let's see what happens. I'll make an updated video. Again, I personally think unemployment number is going to go up. Overall, hope you guys enjoyed this video. Subscribe, make sure to leave a like, check out Moomoo, and see you guys tomorrow. Take care. Bye bye.